this, and then end, at the end of our session, I'm going to send you the recording on the group, right? So today, I just want to try and explain something very simple, which I do believe that is one of the most important things that you guys are struggling with. Many of you, I don't think you're really aware of this. You're just aware of the three types of trend. Quickly before I jump into it, I want to ask you, what are the three types of trend? You raise up your hand. I'm going to ask you to unmute yourself, and then you tell us. I want us to be quick because I want to spend more time on explaining what I want to explain right here, right? So if you know what is three types of trend, raise up your hand. Let me know what are you talking about. I just want to see if you guys really know. Lim, you can also unmute yourself. I've sent you the request.
Hey, hi.
Hey, my leader, how are you?
Fine, and you?
I'm good, good, good. What is three types of trend?
We got an uptrend,
Okay,
we got a downtrend,
okay.
and we got a consolidation.
We got a sideways trend, right? Which is a horizontal one, right?
Yes. Yes.
Okay, thank you so much. I'm gonna take the next one, then it will be the last one. I want to see if you guys I'm getting whatever that I'm looking for. You are correct, but it's some missing type of trend that you guys don't know, which I think it's one of those little missing piece that it keeps on giving you a problem, right? Let me take Chulan Zwane. Chulan Zwane, please unmute yourself quickly. Let's try to move fast, right? I'm moving from Chulan Zwane. He's not accepting. Prosper, Mr. Prosper. Prosper.
Yes, sir.
Yes, my brother. How are you?
I'm good, and you?
I'm good. Talk to me. What are the three types of trend?
I know bullish, bearish, and ranging market.
And ranging market. Okay, cool. Thank you so much. I've got you. So, guys, here are the things. Let's all focus on the screen. Let me explain to you what are the missing part that you guys do, right? So, when the market is going up, obviously they are all right. The market moves on an uptrend, right? So, we've got three types of trend. We've got an uptrend, downtrend, sideways trend. But I'm going to break down to you something that you weren't aware of, so that you can at least know those kind of things, because it will really help you in the future when you are tackling the market. So when you are looking at an uptrend, there are three types of market behavior. So here is the normal one that most of us know about, right? So this is the most famous one that everyone who is looking at the market is trying to find this particular type of trend, right? Where the market is creating some higher highs and then higher lows and then higher high, higher low, and then higher high, and then higher low, and then higher high. I meant to say, right? And then come back again, and then create a higher low, and then higher high, and then higher low, right? Okay, allow me to do this. Let me restart it from scratch because I want to adjust those lines. I feel like they're too distant from each other. Okay, don't worry. I know you're still like, I know those things, but stay with me. You'll figure out something about those three types of trend that you've never even tried to pay attention to, because these are the most important thing, which many of you don't do, right? You don't do your research properly. So when the market moves, this is the normal one, right? Brian, stop writing on my screen, please. Please stop writing on my screen. Blind guys, I urge each and every one of you, don't touch anything. Don't explore anything on the Zoom, please. Because it's gonna write something on my screen which I'm unable to delete on my side. And probably you also don't know how to delete it on your side. Please do not write anything or try to explore anything, right? As I was still explaining, this is the first one, which is the high high, higher low, high high, higher low, and then high high, higher low, right? Perfect. This is the type of trend that everyone knows. It's the most famous one. If you ask someone about uptrend, they will tell you that this is how the market moves. It creates high highs, high lows, high high lows, create a high swing point, low swing point, right? But look at this. Inside of an uptrend, the one that we are looking at, Mr. John, stop what you're doing again, please. Inside of this uptrend that you're looking at, inside of an uptrend that you are looking at, right? There are three types of market behavior that the market uses as it moves, right? I repeat, inside of this uptrend that you're looking at right here, right? There are three types of market behavior inside of it, which you need to be able to identify before you engage into the market, right? What is the next type of trend? So this is the most famous one. This is the first one, right? So the next type of trend that you basically going to find in the market is this one, right? So if the market is not moving with this one, this is the next type of trend that you're going to find in the market. So the market is going to go and create a new higher high, and then they're going to pull back and violate the previous higher high and pull back into the zone. But just because the market has violated the previous high, it doesn't simply mean that the market has broken the structure. And then continuously, this is what they're going to do. They're going to go and create a new higher high, and then they're going to come back again, violate the previous higher high. All the time, what they do, they violate the previous high, but they never violate the previous higher low, right? And then they pull back again, they go to the upside direction, they break above, because why? This is an uptrend, so the highs are dominant. They'll then keep on breaking these previous highs in the market, but when they pull back, they will definitely respect these previous lower lows. I hope you guys understand what I mean, right? As they continue, they violate the previous high as well. They pull back into the zone, they violate the previous high. When I say they violate the previous high, these are the highs in the market, right? These are the highs in the market. So if you look at previously on this one, you will definitely see that as the market is pulling back into this zone, they will then respect the previous high before they have the next continuation. But the difference with this one is that when the market creates this impulsive move, goes to this high, when they pull back, they're going to break it, they're going to break below the previous higher high. So many of you probably, when you see the market breaking from the previous high, you will then think that the market has broken the structure. It's a no. It's not the structure. It's not broken at that moment. The market is still very much bullish. You understand what I mean? So this second one, we call it a high. We call it a high violation type of market behavior. I came up with those names when I was building up the systematic BCB trading solution. This is the most famous one, and most of you know that, okay, the market will create a high and then pull back into the support, and then they continue to create a new high, and then they pull back into the support. Each and every one, if you ask them about an uptrend, they're definitely going to tell you about that one. But we still also have the next one, right? Which when the market creates an impulsive move, they go create their own high, they pull back, they violate the previous low, create their own high, pull back, violate the previous low, continue, create their own high, pull back, violate the previous low, right? Now, the last one is, I call it an imbalanced type of market behavior, a type of trend, right? I call it an imbalanced type of trend. So this is how it looks like, the next one, right? So we've got three types of them, right? Which when the market moves, you definitely have to figure out which one the market at the moment is moving with. Now, the next one will be when the market pulls up from this point. Let's say, for an example, they were creating higher highs and then higher low. What they're going to do is that they're going to break, go create their own high, go create their own low. And then they break above again, they go create their own high, and then they go create their own low. Break above again, they go create their own high, and then they go create their own low, just like that. So these are the three types of trend inside of an uptrend, which you need to be able to identify, right? Sometimes you've seen when the market is creating these higher highs, you will then think that, okay, as they pull back and create a higher low, they're going to go and create a high high, then you're still waiting for the market to come back into the zone before they have the next impulsive move. As you're waiting, the market is still, it's completely leaving you. Why are you still waiting that, okay, they're going to come back into the zone. They're going to come back into the zone. And they never come back into the zone. There is nothing wrong about that type of trade. It's how the market is basically moving. You just have to know how to figure out these three types of trade. And one of the most important things when you open a chart, it is to figure out whether the market is trending or it's ranging. After you've identified if the market is trending or it's ranging, you still have to dive deep and look into the market, which type of market behavior that the market is moving with, right? Why do we call this one an imbalance? It is simple because, as you can see, when it goes up, they go and create their own high, they create their own low, and then they left the previous low unattendedly. So this particular zone, it will then be called what we call a fair value gap. Does that make sense, guys? Are you with me? Let me know in the comment section. We've got a comment. We've got a comment chat box here. Let me know if it's clear or it's confusing. Let me know. I don't want to move fast while you guys don't understand what I mean, right? Let me know if it's clear on the comment section. Guys, I still urge you, stop exploring anything on the Zoom. Don't touch anything. That's what I'm asking, please, because as you can see right now, I've got some ticks on my screen. I can't remove it on my end. You understand what I mean? It has to be you, whoever who wrote this, you must remove them on your side. So I'm asking you, when you are here, do not write anything on the screen, please. You understand what I mean? So now you need to be able to do what? You need to be able to identify which type of market behavior the market is moving with, so that when you're looking for your entries, you are not left behind. Because for an example, when the market leaves here, right? Let's say the market leaves here. So what will you be doing? Let's say you are waiting for a breakout from this zone, right? For the market to do what? To pull back and continue to go up. And then the next thing, you see the market doing what? Go create a new high, and then they create a new low. Then they are gone. Go create a new high, and then go create a new low. They are gone. Go create a new high, create a new low. Then they are gone. So you are definitely left behind. So you need to be able to know what is it that the market is doing. Is the market moving with the support and resistance type of trend, which is the most famous one? Or is the market moving with the one which violate the previous high and go take out the current high? Violate the previous high and go take out the current high. Violate the previous high and go take out the current high. Violate the previous high, go take out the previous high. So you need to be able to identify these type of market behavior. So as I said, I first asked you guys, what are the three types of trend? And you said it yourself. You said we've got an uptrend, we've got a downtrend, we've got a sideways trend, right? Now, what we're looking at here is an uptrend. That I broke it down for you inside of an uptrend. What really goes down when you are about to execute a trade? You must be able to identify which type of market behavior the market is currently using at that particular moment. I hope that makes sense, right? Now, I'm going to go into the downtrend as well and see if what are the three types of market behavior that we could find right there. So obviously, when the market is going down, we've got one of the most famous downtrend, which is the support and the resistance, right? So the market will be doing what? We'll be creating lower lows, and then lower high, and then lower low, lower high, and then lower low, lower high, and then lower low, lower high, lower low, lower high, and then lower low, lower high, lower low. This is the most famous market. This is the most famous type of trend. So this is what we call a downtrend. Remember, if we're not buying, we're selling. So we spoke about three types of trend. We spoke about an uptrend, we spoke about a downtrend, and then we spoke about a sideways trend. So what we started with the uptrend. So what we're looking at right here, it is the downtrend, right? So on this downtrend, this one, it is the most famous one that most of you is the one that you know, which creates an impulsive move, go and create a new lower low, then they pull back into the previous lower low to retest, and then they continue to go down. They create their own low, and then they took out the previous lower low, and then as they pull back into the zone, they create another lower high, and then they go down again. They create a new lower low, and then they pull back, and then they violate the previous lower low, and then they continue to go down. So this one, it normally respect or continuously move in this way, right? Up until the structure breaks, and then probably it then begins to create what we call an uptrend. These are some of the things that I'm going to teach you with time. But today, I don't want to feed you with too much information. I want to stick to the 3 types of trend. Now, the second type of trend that we're going to find in the market is the low violation, right? Is there low violation is this one. So the market will be creating this lower low, lower high, and then as they go down, they're going to come back. Look at what they're doing. They're violating that previous low, right? And then they pull down. Again, they go create a new lower low, and then they violate the previous lower low again, and then they break down, they go back, they violate the previous lower low again. And then they will go, then continue to go down, and then they violate the previous lower low again. And then they pull back again, and then they go down, they violate the previous lower low. So this is low violation. You can call it high violation when the market is going up. You can call it low violation when the market is going down. So the most important thing, it is to identify which type of market behavior the market is moving with at that particular trading session. I hope that makes sense, guys, because it doesn't have to contradict you at all, right? Now, the last one will be as one of the most difficult one. I must tell you, I think I've discovered this type of market behavior on my 6-year trading, this one. Because I had to study the market over and over and over again and look at the behavior of what it does constantly with time. Then I realized that, okay, if the market is not moving with the support and the resistance one, it will then move with the one which violate the low or violate the high when it's going up. Then this last one, all what it does, it moves very strange, right? It will start very nicely creating the support and resistance in most cases, and you just see the market doing what? Go down, you just see the market leaving spaces in between, right? They're then gonna go create a new low, and then they create their own high, and then they continue to go down, they create their own low, they create their own high, and then they continue to go down again. They create their own low, they create their own high, and then as they continue to go to the downside direction, just like that. As you can see, these three type, this type of behavior inside of a downtrend, they are completely different. They are completely different. Each and every one of it, it's very much unique, right? But I can rest assure you, this, it is the most famous one, this one. Everyone, when they start learning how to trade, they know that, okay, we've got a support and the resistance, support and the resistance, support and the resistance, support and resistance, support and the resistance. Then now it becomes very much challenging when the market then twists from this type of market to this one. Because what will happen is that you are going to be glued that when the market leaves this lower low, they are coming back into that previous lower low to retest, then they have the next continuation. But only to find out that when the market pulls back from this lower low, you're going to see them getting into the zone before they have the next continuation. And then you start becoming surprised and you think, oh, the market is violating the price, the market is doing that, they're manipulating. They are not. You just don't know the type of trade that the market is moving with. I don't know if I'm making sense or I'm speaking in parables. You just don't know the type of trend that the market is moving with. Because I'm going to give you a simple example. If you put in your trend line, right? If you put in your trend line right here, let's say for argument's sake, you put in your trend line right here. Right? So this is how it's going to be. It connects very nicely. There's nothing which needs to be forced. You understand what I mean? But what you need to understand is that these two, you can use a trend line. It will work perfectly. The trend line will be there, right? And remember, just because you're putting a trend line, it doesn't mean all these highs they need to touch to the trend line. You can still have some zones they didn't touch into those points, but that doesn't mean that the trend line it's not valid. In order for you to have a trend line, you just need 2 or more touches. I don't know if you get my point. So if we have this first touch right here, and it probably didn't touch for the second time, probably it's somewhere right here, it touched for the third time, and then it touched for the third time. This is a valid area of trend line. It's valid. You don't need a lot of touches, because some of you end up even trying to force it, trying to put it in. You don't have to. When it's sitting here and then you've got nice 3 touches from that zone, it's fine. You know why I'm saying this? Because an area of trend line is a zone, it's not a line. An area of trend line is a zone. So if you are to stretch it back into those lines, into those areas where it didn't touch, right? It is within the zone. If you look at it, it is within what? It is within the zone. If you look at those touches, they are within the zone. So a trend line zone, it's not a line. It's not when you put a line and then you say this is a trend line. So as long as you've got 3, or as long as you've got 2 or more touches from that particular zone, then you're fine, right? As I still continue to explain them, right? So here's the thing. The last one, it doesn't have trend line. There is no trend line that you can draw right here. Are we clear? It doesn't have any trend line here. It doesn't have any trend line. Once you see the market creating the imbalanced type of market behavior, do not try to force the trend line. Just know that it will leave those spaces. All you got to know its market structure when you are trading this one. You must just know that the market will go and create its own lower low, and then it will pull back, create its own lower high, right? And then from this lower low to this lower low, and then when the market creates a lower high, you must just know that that will be the turning point. That will be what? That will be the turning point. The minute they give you those factors of confidence that they're having a reversal, that will be the turning point. And what this market does is that it leaves an imbalance. So the market it doesn't balance all the time as it moves. So it will then create an impulsive move and then create this high, this low, and then continue to go to the upside direction. And it leaves this space in between all the time. So you just have to know which one the market is using at that moment so that you can be able to do what? You can be able to tap in it. So I know you guys have always knew about this one, this type of trend. Every time when you are trading, you are looking for support and resistance. The market must break, come back into the support, break. No, that's not how the market moves. So you must be open-minded when you're tackling the market, right? When you try to look at the market structure as to which one, the type of market behavior that the market is using. Just a quick one, right? Just to show you something. Quick one, quick one. Just to show you that whatever that I'm talking about, it's there. It's there. It's there in the market. Let's quickly check BTCSD. I know I can find this one quickly, right? Okay. I hope you guys can see my screen, right? So as the market broke the structure from this point to this point, what did they do? They left an imbalance. Created lower low, lower high. Broke again, came back to this point, created another imbalance. Created a lower low and then lower high. What made them to turn from this point to continue to go up, it was because there was a reversal pattern now that the market is changing the structure. But this is the last one that I was talking about. I hope you guys understand what I mean, right? Now, let me quickly look for another one because we don't have a lot of time. We still have to go to a sideways trend, right? I'm just trying to show you these examples, right? So you need to be able to identify what type of market behavior the market is doing. In most cases, BTC is using that, as you can see even here. From this point to this point, what did they do? From this point to this point, right? They went above, create their own higher high, higher low, went and create a higher high, pulled back again, created their own higher low. What are they leaving? They are leaving fair value gaps in between. So you need to be able to identify which type of market behavior that the market is moving with. Now, let's quickly look at this. They then begin to shift the structure again, right? So when they shift the structure from here, this is what they did. They then begin to do what? Resistance. Back into the support. Resistance, back into the support. Resistance, back into the support. You see now they changed the structure. This was the higher low, and then this was the higher high. Right? They pulled back into the zone to create a higher low, back into the previous higher high. Right? And then they continue to go create a new higher high, and then they pull back to create a higher low. So you see, I've shown you two types of trend right now. The imbalance one and the support and resistance one. Now we're gonna try and find the other one, the high violation or the low violation, right? Let me check GBPSD because I've seen it this other time. If you look at here also, just a quick one. Just a quick one. So if you look at here, just a quick one. So the market was using resistance, support, resistance, support, resistance, support, resistance, support. Right? From this side, they were using what? They started very well. Then they started leaving an imbalance. Imbalance, imbalance, imbalance. Can you see? So this is a totally different structure from this one. Right? Now, if you look at closely right here, if although they didn't move very much, they moved very shortly and then they turned again. If you look at here, I'm going to try and find a clean one for you. If you look at here, they wanted to come with the second one that I was talking about. Right here. They wanted to do what? To come with the second one. So we had a higher high, and then this is the okay, first lower low, broke the structure, and then as they come back, they violated this. Instead of them coming back to retrace at the zone, before they continue, they did what? They violated, they went up. They came back, they were supposed to violate, since they already violated this low, right? We would have loved to see them continuously doing this, but they didn't hold the price too much. But that is the type of trend that they were moving with right here. So they were violating the previous low, going to the upside, then they took out the previous low, then they continue. We would have loved to see them continuously doing this. But I'm going to look for one for you. Let me quickly try and find one for you. How many minutes we left with? I need to go to the sideways trend quickly. Okay. It's very simple. Let me do like this. Okay. So this is the higher high point. This is the previous high. Then the market came to this point, violated that previous low. Right? They went above. This is the high point. This is the previous high point. Instead of them coming back to the zone to continue, they did what? They violated. They never took out this previous low. Then they continue. This is the high. This is the previous high. They did what? They violated. They came to this low, and then that's where they had their reversal. But what are we looking at? The buys were overall taking over the price on the upside direction, right? I'll try even tomorrow to find you one of the most clearest one on this one, because I just want to quickly go into the sideways trend. I want to quickly go into the sideways trend before it cut us, right? We have about 5 minutes. So on the sideways trend, this is what we have, right? I've spoken about the downside, the downtrend. I've spoken about the uptrend. So on the downside, on the sideways trend, this is a horizontal trend. This is a sideways trend. So on the sideways trend, it's when the market then stops trending. I hope you guys understand me, right? It's when the market stops trending. When the market is trending, it's when it's going up, creating what? Creating higher high, higher low, higher high, higher low, higher high, higher low, higher high. Or when the market is creating what? It's creating lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows. In this manner, the market, it is trending. Now, when the market stops trending, normally we call this a resting period. So what it will then do, it will then create what we call a sideways trend. So a sideways trend, it mostly looks like this. These are the buyers which push the price to the resistance, and then the sellers push the price to the support. The buyers push the price to the resistance. The buyers push the price to the support. The buyers push the price to the support, to the resistance. They push it back into the resistance, the sellers, just like that. So what happens right here is that the market keeps poking between the support and the resistance. This is the support, this is 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 the resistance. This is the support. So it's when the market, it's in the resting period. Probably it normally happens after a very huge movement that took off in the market, right? Now, we often call this type of particular market that the market, it trades within a certain price equilibrium all the time. You understand what I mean? So once the market breaks out from this zone, it means that will be the beginning of a trending market, which the market is most likely probably to create what? Lower low, and then lower high, lower low, lower high. If it will break to the upside direction, it will probably be something like this. It will then break, create a lower low, higher low, and then high high, and then high low, and then high high, and high low, and then high high. Right now, this is exactly what is most likely to happen if the market breaks. But most of the time, after a very huge impulsive move, such as what? Such as the uptrend and the downtrend, the market is most likely to give us what I just showed you right here. Let me quickly do this for you before it cut us so that you guys can understand what is it that I am talking about, right? Now, if you look at on GBP USD quickly before it cuts, let's go to I'm on GBP USD. Let me just do like this. If you look at on GBP USD, right? So the market, as I was explaining to you, we've been going to the upside direction, creating high highs, higher lows, high high, higher lows, high high, high lows. At the end of an uptrend, how do we identify if we are at the end of an uptrend? This is how you identify it, right? Is this monthly time frame or this is weekly time frame? Let's go to monthly time frame quickly. So if we get into the monthly time frame, you will definitely realize that we are at the end of an uptrend, right? Where we had multiple touches, which this was the first touch from the same zone, second touch, third touch, and then fourth and then fifth touch. This is the end of an uptrend because the market keeps poking between this zone. Whenever it gets into the zone, they will then pull back. Whenever it gets into the zone, they will then pull back. Can we have a second session tonight? Okay, now look at this. At the end of that uptrend, this is what's going to happen. This is what's going to happen. This is the end of an uptrend, right? We all know. So the market has created what? It's created a sideways trend. Can you see? It's a resting period after a very huge movement. right? So the market does what? They've got this first touch, second touch, and then they try to break we call this a false breakout. This is a false breakout, and then another touch, right? This is another touch, this is another touch, this is another touch, this is another touch. So this makes it a sideways trend. At the end of an uptrend. What are we going to be waiting for? Because it at the end of of an uptrend, we're going to be waiting for some factors of confluence. If the market is going to continue to break to the downside direction, or it will continue to break to the upside direction. That brings us to the second day of our 5 days free mentorship. Don't miss tomorrow's session because I'm going to be continuously connecting all these 3 types of trend and show you how you could apply it using the systematic BCB trading solution in order for you to find precise entries. Thank you so much, guys. Let me love and leave you. I will send your recording on the group now in a second. Cheers. I'm out. Okay, before I leave, because I think we've got a second, I'm going to open